Our talk today is entitled Globalization and Finance, the Future of Islamic Finance as an Ethical Investment. Our speaker is Dr. Karen Hunt Ahmed. She is an assistant professor of finance at DePaul University. Before receiving her PhD, she worked in the banking sector in Chicago and for a private equity fund in Dubai in the United Arab Emirates. Her research interests include moral beliefs and business practice, ethical investing, globalization, and Islamic finance. She is currently working on a book entitled The Business of Culture, Morality and Practice in Islamic Finance. Dr. Hunt Ahmed teaches Islamic finance at DePaul University's College of Commerce. Her class is one of just 2 Islamic finance classes offered in the United States. She is also on the advisory committee of DePaul's Center for Financial Services and consults for private equity, legal, and asset management firms interested in Sharia-compliant investment products. Our speaker received her BA and MBA from Washington University in St. Louis and her PhD from the University of Chicago. She lived in Dubai for many years and has traveled extensively in the Middle East, Pakistan, Africa, and Europe. Please help me, if you would, welcome Dr. Karen Hunt Ahmed.
Good morning. Good morning. Thank you, Jim, for that very generous introduction. And thank you all for coming out to this lecture series, 10 Years Hence. I suppose when you found out you were coming to a lecture on Islamic finance, I'm probably not the person you pictured to give the lecture on Islamic finance. And usually that's the case. And the first question I often get asked when I do a presentation like this is, how in the world did you get into Islamic finance? So I'd like to start this morning by telling you that little story. As Jim said, I got my BA and my MBA from Washington University in St. Louis. At the time, I was interested in what was a very small and new growing field called microfinance. And at the time, this was in the late 80s, early 90s, microfinance was a very, very small field. Many of you may have heard of it because of Grameen Bank in Bangladesh, and the founder of Grameen Bank, Mohammed Yunus, actually won a Nobel Peace Prize in 2006. But at the time, almost 20 years ago, I was very interested in microfinance and more generally in how people apply ethical and business values, beliefs about business values in their business practice. So after I got my MBA, I ended up in Chicago working for a bank. I thought, I'll work for a bank. I'll try and get some banking experience. But before I could really get any further into the banking experience, it happened to me what happens to many people, and I fell in love, and I got married, and I moved to the Middle East. Well, I guess most people don't move to the Middle East when they get married, but I did. And I ended up in Dubai in 1991, and being the career-minded American woman, I immediately got a job in finance, which is what I knew. And I worked for a private equity. Well, it was really a finance company that did mostly private equity type of investments. But one of our investments, was for an oil rig in Angola. And I was looking over the documents, the finance documents for this oil rig in Angola. And the cash flow looked pretty much normal, like you would see in a normal, financing transaction. But there was this Arabic word called ijara, written all over the lease documents, or the documents. And so I said to myself, first of all, what is this? The cash flow looks the same, but there's this weird name for this transaction. So I went and asked my colleagues, and they said, oh, it's this thing called Islamic finance. It's a lease transaction. It's called Islamic finance. Well, this was in 1991 or 92, and I'd never heard of Islamic finance. I was there living in the Gulf, and I'd never heard of it. So I did a little research into the industry. Very, very small industry, not much to read or research about it at the time. So I sort of forgot about it except for that one transaction. Well, later on, ended up back in Chicago at University of Chicago getting my PhD. And something I read about business values, inserting your values into your business practice, reminded me of Islamic finance. So I said, let me just pick up my research where I had left off in the early 90s. Well, by now it was the late 90s, and the Islamic finance industry had grown by leaps and bounds in the decade of the 90s. and was now getting to be big business. So good for me. I went back to Dubai, did my field research, and wrote my dissertation on Islamic finance and more generally on morality and business practice. So that's how I got into Islamic finance in the first place. Today I'd like to tell you a few things about Islamic finance. First, I'll tell you a little bit about what the industry is doing now. And I often get a lot of questions when I do a presentation like this that are based on some popular misconceptions that are usually propagated by the media and just generally some beliefs that aren't really true about Islamic finance. So I'd like to address some of those in this talk. Thirdly, I'll explain to you what is Islamic finance. And this is the general description of how the industry is set up. What are some of the basic principles of doing Islamic finance? And finally, I'd like to tell you a little bit about the market opportunity, what's going on right now and what the next decade or so looks like in the field of Islamic finance, and what, if any of you are interested in participating in this industry, what might be out there for you. Okay, well, first of all, as you might guess, Islamic finance was originated by Muslims. The market opportunity around the world, approximately 20% of the world's population is Muslim. And that's over 1.5 billion people. Okay, about half of that population is concentrated in the 16 countries you see highlighted here on this map. You can see those include the United States, Europe, particularly the UK and France and Turkey, North Africa, the Indian subcontinent, Malaysia and Indonesia over there in the Far East, and finally in the Gulf Cooperation Council states on the Arabian Peninsula. Now, since I did my research and I have lived in Dubai twice in my life, and I've traveled there almost every year since 1988, so that's now 20 years, I guess. I do most of my research, and I am the most familiar with the Islamic finance industry in the Gulf. So most of what I say today is colored by my experience in the Gulf. But I do want to let you know that, in particular, Malaysia, Indonesia have a very, very strong Islamic finance system, as well as Europe and the United States. And like I said, I did my work in Dubai, United Arab Emirates, so I'll concentrate mostly on the GCC states of Saudi Arabia, Kuwait, Bahrain, Qatar, United Arab Emirates, and Oman. Okay, Islamic finance had a really busy year in 2007. As you can see, there was a lot going on, okay? At this point, there are over 500 Islamic financial institutions worldwide. The United Kingdom government in July of 2007 agreed to issue a sukuk, which is like a bond, and I can talk a little bit more about that later, basically like a municipal bond. The UK government agreed to issue one of those. From the government itself, it was the first non-Muslim government ever to agree to issue a sukuk. The DIFC, which is the Dubai International Financial Center, issued a $1.25 billion sukuk. Deutsche Bank in Germany issued over $10 billion worth of sukuks. DP World, which is Dubai Ports, issued over $1.5 million sukuk. Dana Gas, which is a big gas company in the United Arab Emirates, issued another $1 billion sukuk. DBS Singapore opened up on the island of Singapore, which is not even a Muslim country. It was the first Islamic bank in Singapore. In addition to this Islamic bank, HSBC owns a Takaful insurance company in Singapore. So there's quite a lot of Islamic finance activity in that little country of Singapore. And finally, Investment Dar in Kuwait, which is an Islamic financial institution, bought a $1 billion stake in Aston Martin. And that investment was 60% equity and 40% murabaha, which is a form of debt financing. Okay. And as you can see, some of the major players in the industry are listed on the slide. You may recognize many of them, and you may also recognize that none of these companies is primarily Muslim-owned or primarily has a customer base of Muslims. So as I'll talk about a little bit later, Islamic finance is not only for Muslims. It's a financing scheme that can be applicable to anyone who's interested. Okay, some of the misconceptions I run into are the following. First of all, people tend to think that since the religion of Islam has been around for more than 1,400 years, that Islamic finance must be an old industry. And that's actually not true. Islamic finance only started in the early 1970s as an industry. Now, of course, you may wonder what happened before then, in the previous 1,400 years of the existence of Islam. And here's what happened, briefly, very briefly. I'll take you through the 1,400 years in a very short amount of time. In the early days of Islam, the Prophet, peace be upon him, was a businessman, as was his wife Khadija. And commercial trade was very, very active on the Arabian Peninsula, where Islam got its start. So as such, many of the rules of Islam had to do with commercial activity. And there was no need for a separate Islamic finance industry because the rules were incorporated into the rules of everyday life. And as people traded with each other, they just traded as was the custom of the time. As Islam spread, and also as trade spread throughout the world, as it got easier and more profitable to go around the world trading, Islamic finance, basically, people just traded. You know, they just did what they've always done, went by the rules of the commercial trade. And if they encountered differences in opinion, they would just negotiate and work it out. There was no need to take a stand and say, you know, we have to do it the Islamic way. They just work it out. And finally, the years passed, and many empires grew up. Many of the Islamic empires grew up across the world, in Syria, Baghdad, Persia, the Indian subcontinent, and onto the Far East, and even up into Spain in Europe. These different empires, you know, would trade with each other, and Islamic law provided an overarching guide to how to conduct commercial activity throughout the empires. Well, as time went on and these empires fell and the colonial powers came into Muslim countries and brought with them their Western financial institutions. Okay, this was the first real crisis in way of doing business under Islamic law. So what happened was, since the colonial powers mostly brought in their own kinds of financial institutions, people had a choice. They could use the Western financial institution. They could negotiate some kind of compromise if they wanted to do business according to Sharia law and with the Western financial institution, or they could not use the bank at all. Most people chose either to use the Western financial institution or to negotiate some kind of arrangement. An example of this arrangement might be a joint venture, which is perfectly acceptable under a conventional financial system, and it's also perfectly acceptable under an Islamic financial system. So around the early to mid part of the 20th century, as the colonial powers started pulling out of Muslim countries, people became more aware of their cultural roots and their cultural belief systems and tried more and more to incorporate them into their everyday lives. So there were a few experiments with Islamic banks, most notably in Egypt and in Turkey. And these banks failed for various reasons, mostly because they were individual institutions trying to operate in a Western-based financial system. So then what happened in the early 70s? A few things happened. First of all, in the late 60s, there was the Six-Day War between Israel and Egypt. And the outcome of that war sparked a wave of Arab nationalism and more awareness and pride in people's heritage, in Arab heritage. And the second thing that happened was the oil crisis in the early 70s, when oil prices shot up, inflation shot up, and suddenly there was a huge, huge influx of cash into the Arabian Gulf. At this time, the Arab businessmen in the Gulf realized that they had this huge amount of cash, and, you know, they could use it how they wanted to. And some of the businessmen started saying, hey, why don't we invest this money according to Islamic principles? So the first two Islamic banks were started in the Middle East. The first was Dubai Islamic Bank in Dubai, and the second was the Islamic Development Bank in Saudi Arabia. And those two banks were really the beginning of what is now a very large Islamic finance industry. And when I say industry, I'm really referring to a lot of institutions that work together to form some kind of coherent way of doing business. So the beginnings of the Islamic finance industry really have their roots in the Arabian Gulf in the early 1970s. Since then, Malaysia also in the 80s picked up on this trend, and businessmen in Malaysia worked very closely with the Central Bank of Malaysia to incorporate an Islamic financial system into Malaysia's central financial system. And out of all the countries in the world, Malaysia's financial system is the most developed grassroots level of an Islamic financial institution industry. There's a lot of retail banking in Malaysia, and it's very common for both Muslims and non-Muslims to use Islamic banks in Malaysia. So that basically started in the 1980s. Then along in the 1990s, you had people who's from the Indian subcontinent mostly, not exclusively, but a lot from the Indian subcontinent, some from Lebanon, Syria, North Africa, whose parents had migrated to Europe or the United States, and whose children had been born and grown up in Europe or the United States, and began to see how Islamic finance is a way to integrate both that identity as a Muslim, but also the identity as being a part of the international financial system. So that way of developing the Islamic finance industry really started in the 90s and has really taken off in the 21st century. So Islamic finance is not an old industry. It is a very new industry, and it's one that, though it's in its early stages, it's growing very rapidly. Okay. All right. Another question I get is, can only Muslims participate in Islamic finance? And the answer to that question is absolutely not. Anyone can participate in Islamic finance. Islamic finance is a way of structuring financial transactions and a way of organizing business practices within an institution. It's based on Islamic beliefs, but not exclusively Muslim. Anyone who wants to can participate in Islamic finance. Another question I get is, well, if a Muslim does finance, isn't it automatically Islamic finance? And no, that's not true. Like I said before, Islamic finance is a way of structuring a financial transaction and a way of looking at business practice, and it's not specific to anyone or their religion. It's based on Islamic principles, but you don't have to be Muslim to participate in Islamic finance. And if you are Muslim, it doesn't mean you're doing Islamic finance. And finally, one of the, I think, biggest misconceptions is that all Middle East and Arab financial activity is Islamic finance. And this is absolutely not true on two levels. The first level is, after 9/11, we heard a lot about an informal way of moving money around the world called hawalas. That idea of hawalas was often confused with being Islamic finance, and it's not. Hawala is an informal way of moving money around the world. It's not regulated at all. Islamic finance is an industry, an international financial industry that is highly regulated. And as such, it's not informal, it's not a hawala. Now, on the other level, not all Middle East and Arab financial activity is Islamic finance. In fact, in Dubai, with which I'm most familiar, and in the Gulf in general, only about 20% of all financial activity is Islamic finance. And as we'll see a little bit later, that number is growing rapidly, but right now only about 20% of the financial activity coming out of the Gulf, at least, is Islamic finance. And in the other parts of the Middle East, Lebanon, Syria, Jordan, it's even a smaller percentage than that. Okay. So now I've told you what Islamic finance is not. What is Islamic finance? Okay, first of all, as I mentioned before, Islamic finance combines conventional financial activity with Sharia law. Sharia law is Islamic law. And you'll often hear, Islamic finance, you'll often hear it called Sharia compliant finance. for people who, it's just another way of saying Islamic finance. Islamic finance is compatible with conventional finance. I gave the example of a joint venture earlier, and there are many other ways in which it's compatible with conventional finance, but there are some differences in treatment of ownership and risk. Thirdly, Islamic finance covers both equity financing and debt financing. Equity financing is based on a profit and loss sharing scheme, and the debt financing is based on commercial or sales financing and also lease financing. And finally, Islamic finance is seen and also views itself as part of the socially responsible investing movement. And this is something akin to green funds or environmentally friendly funds. Okay. Now, more specifically, some specific characteristics of Islamic finance have to do with some prohibitions. The first, and the one you may have heard of most often, is the prohibition of riba. Riba is an Arabic word. It's usually translated as interest or usury. And basically, Islamic finance prohibits all interest or usury on money. And usury is any increase on the use of money without another use of that money being employed. The second prohibition is qarar, and that is basically the idea of gambling or speculation. You're not supposed to gamble or speculate on money under Islam. And that's not exclusive to Islam. The Jewish and Christian religions have in the past had injunctions on both gambling and on the charging of interest. And finally, Islamic finance is prohibited in trading in certain haram or forbidden products, such as alcohol or pork, arms trade, or even institutions that charge or pay interest on their investments. Okay. A second characteristic of Islamic finance is the conscious integration of religious practices into daily life. And people in the industry try and pay a little more attention to how business practices are set up and how that relates to Islamic law. Now, this is not to imply that conventional finance pays no attention to business ethics, and we all know that's not true. But Islamic finance does make a conscious effort to integrate specific religious practices into its daily business practices. Thirdly, in the industry, there is a great talk and effort about social justice. And what they mean by social justice is basically that a company, like the corporate social responsibility movement, a company should give back to its community and make business practices that are good for the community and use part of the profits to put back into the community. And most Islamic financial institutions have some way that they get the money back into the community, not unlike the Community Reinvestment Act that we have for our banks here in the United States. And finally, one of the most identifying factors of an Islamic financial institution is the presence of a Sharia standards board. And I'll explain a little bit more about that in a few minutes. Okay. First of all, the injunctions against riba have their basis actually in Judeo-Christian thought, and even before Judeo-Christian thought, all the way back to the time of Aristotle, who, as many of you may know, was very much against the charging and paying of interest on money. There's a specific verse in Deuteronomy that enjoins a believer not to lend at usury to his or her brother. And any increase on money is called usury. And that was a prohibition in both Jewish thought and in Christian thought. And throughout the centuries, that kind of dropped out of Jewish and Christian thought, but is still very much alive in Islamic thought. And as you can see, there is a hadith, which is a story of the Prophet Muhammad, peace be upon him, that enjoins the Muslim not to engage in usury, which is basically any increase over the principal amount. Okay. Now, the idea of injecting moral beliefs into business practice is not exclusive to Islamic finance. And as I just told you about the riba, or the interest or usury, there is a historical pattern in the Abrahamic religions against or for injecting some moral values into the business system. And in general, there has been a tug of war between the business, which is seen as representing greed, and the religious aspect, which is seen to temper greed. And this is something that you can see coming back into history. It fell out for a while, but it's coming back into business practice generally, in the general worldwide trends. And you see this return to a religious consciousness, not only in Christianity, in Judaism, in Hindu fundamentalism, and of course in Islam. And this is a worldwide trend. And finally, the injection of, or the attention to morality in business practice is not exclusive to those with religious beliefs. I mean, there is the idea of faith-based investing. And if any of you are interested in religious investing, you can find a Catholic fund, a Lutheran fund, a Presbyterian fund, a Calvin fund, many different funds based on investment schemes based on religious beliefs. But even a lot of the investing, the socially responsible investing schemes are not based on religious beliefs. They're based on something else. And one of the most widely known is the idea that your investment should be either good for the environment, or at the very least, what you're investing in should not harm the environment. And this is where we get the pretty well-established industry of green funds that we know of right now. And finally, like I mentioned before, there's an idea that corporations should give back to the community in some way. That corporations should be responsible. They should incorporate business practices that are good for the workers, that are good for the community, and if possible, put some money back into the community for community development. And Islamic finance falls into that category of corporate social responsibility as well. Okay. Now, one of the banks I studied when I was in Dubai was kind of interesting, and they had an interesting way of incorporating business practices or Muslim belief system into business practices. Now, one of the most interesting and also probably controversial things that people know about Islam is the idea of the gender separation. Now, I want to say first of all that it really is gender separation, and separating the genders doesn't mean that one gender is better than another one or superior to the other one. It just means that in public, men and women are not supposed to mix with each other unless they're married or closely related to each other. Now, banks in general in Dubai provide separate banking facilities for men and women. And this includes not only Islamic banks, but also just conventional banks like your usual Citibank or UBS Standard Chartered. They usually provide separate entrances. There will be a men's entrance and a women's entrance. You have access to the same financial services. The women's side is staffed by women, the men's side is staffed by men. And it's not necessary to bank like this, but it often makes men and women more comfortable not to have to mix in public. Dubai Islamic Bank took this idea one step further, and in the year 2000, opened the first ever ladies branch of an Islamic bank. This branch that you see in the picture is called Johara. It's an exclusively ladies branch. It's a separate building in a separate part of town from headquarters. It's a very, very nice building, marble all inside, very grand entrance as you can see, and very nice and very comfortable inside, very friendly and welcoming. And it's a place where women can go to do their banking and also be very comfortable. Now, women can also still go to any of the other Dubai Islamic Bank branches, but this one, it just happens to be more comfortable. And Dubai Islamic Bank opened this branch so that women would be more comfortable doing their banking activities. And as you can see in this brochure, they call it the social return. The idea of opening the ladies branch is also the idea of a social return. Okay. And that falls under the general idea that you see sometimes in Islamic finance. You'll often hear something like, Islamic finance is conventional finance without the impurities. Or Islamic finance is trying to combine contemporary financial activities with traditional values. And so opening a ladies branch, it comes along the lines of this kind of contemporary financial activities combined with traditional belief systems. And I found this picture of Dubai, which really illustrates that concept very well, I think. And you can see how the flashy high-rise buildings are superimposed with a more traditional way of getting around the Dubai Creek in the form of the abras. Those boats are called abras. And so this is kind of a neat way, a neat schematic for how Islamic finance tries to position itself in terms of the social return, the contemporary financial activity mixed with traditional belief systems. Okay. And finally, as I said, probably the most defining characteristic of an Islamic financial institution is the presence of a Sharia standard board. A Sharia standard board is usually composed of about 3 Sharia scholars. They are educated in Sharia law and also in finance. And in the beginning, it was kind of hard to find someone who was educated in both of those, but now it's becoming more commonplace. And there are a few of the big, famous Sharia scholars, but it's becoming more of a career path for many people who are interested in both Islamic law and in finance. The Sharia board serves an independent audit function for the company itself. You know, like a company will have the board of directors, and a bank will have a loan committee, and those each have their own roles in approving the corporate governance process or the actual financial activities of the institution. But an Islamic financial institution will also, in addition to the board of directors and a loan committee or some kind of a committee to approve financial activity, will also have a Sharia board. The Islamic financial institution must adhere to the declarations of the Sharia board, which are given in the form of fatwas, the religious declarations, and the Sharia board must approve every one of the transactions. Now, the Sharia board is really, really important to an Islamic financial institution because the Sharia board's approval can lend credibility not only to the financial transaction itself, but to the entire institution. And in fact, one of the rating agencies, Moody's, has a quote out there that the Sharia board is so important to an Islamic financial institution because what's important is not so much if the Islamic financial institution is structuring the financial structures according to Sharia law, it's even more important that the Sharia board says they're doing that. And so the Sharia board will make sure that the financial transactions adhere to Islamic law. And it's very important for the credibility of the institution. And often, along those lines, the Sharia board will be very involved in developing the new products and services. There's a lot of innovation going on in the industry right now. And the Sharia board will actually help develop the new products and services so that the loan officers or the investment officers don't go through the entire process of formulating a financial transaction only to find out it's not Sharia compliant. Now, one of the interesting difficulties with each company having a Sharia board is that with different people on different boards, they can interpret the law in different ways. So you can imagine that's kind of confusing. So there's an effort now to set up a central Sharia standards board to kind of centralize the regulations, the Sharia regulations. Hasn't happened yet. And one of the reasons it's been so difficult is because there are actually a lot of regional difficulties in interpreting the Sharia law. For example, Sharia scholars in Malaysia are generally thought to be more liberal in their interpretation of the law, whereas scholars in the Gulf are generally thought to be more conservative. And scholars in the U.S. and in Europe are often drawn from the Gulf or the Indian subcontinent or Malaysia. And so the interpretations of the Sharia boards for financial institutions in Europe and in the U.S. are often very, very mixed, depending on where the Sharia scholars got their training and education. So the Sharia board is an extremely important part of an Islamic financial institution, but it hasn't exactly been worked out what the central standards are yet. And this is one piece of evidence to show this how early in how early of a stage the Islamic finance industry is right now. Okay, so those are the general principles of the industry as a whole. But how is an Islamic financial institution set up? Okay. Well, they're usually set up by special charters from the government, the U.S. government, and in particularly in the U.S., the IRS has been very involved in trying to figure out where an Islamic financial institution fits into the finance industry in the U.S. Often a financial institution will function like a bank, but may not always use bank in the name. There's some division in the industry on this. Often the term bank is associated with conventional finance, and the main way a bank makes money is through the charging of interest on its loans. Well, since an Islamic financial institution can't charge interest, a lot of people take issue with calling the institution a bank. So you will sometimes see an Islamic bank called bank, like Dubai Islamic Bank, or you'll sometimes see the Islamic financial institution functioning like a bank, but called by another name. And there are three primary forms of Islamic financial institutions. First of all, there is the fully functioning bank, okay? They're often publicly owned, and sometimes they're partially government owned. They provide retail, commercial, and private banking services like checking accounts, savings accounts, home mortgages, but they're all changed to be Islamically Sharia compliant. Okay? You will often have in the Gulf, especially a standalone ladies branch, like I just showed you with Dubai Islamic Bank, and you'll have just usual retail branches. You can, if you're a customer of an Islamic bank, you can go to an ATM and get cash out just like you can at a conventional bank. Functionally, there's no difference, but when you do go in to sign the papers to open your account, there are some differences in those papers. And some examples of those are Dubai Islamic Bank and Kuwait Finance House in Kuwait. Okay, the second way of doing Islamic finance is through a conventional bank that has an Islamic finance window or a special division devoted to doing Islamic finance. This is usually a multinational bank like HSBC, Citigroup, UBS, and they'll have a physical headquarters of the bank. For example, in Dubai, HSBC has HSBC headquarters and branches, and there is also a separate HSBC Amana headquarters, which is the headquarters of the Islamic part of HSBC in Dubai. In addition to being physically separated, the buildings being physically separated, the funds are also separated from between the conventional bank and the Islamic window. There's no commingling of the funds. And these banks, again, offer commercial and retail and private banking services. Devon Bank in Chicago is one of the first banks in the U.S., first conventional banks to have an Islamic window. So that's pretty exciting, and that's located in Chicago. And finally, the most common way of doing Islamic finance is through an Islamic financial institution, right? It's usually a joint venture between some multinational corporation and an Islamic investor, or most likely an Islamic institutional investor. Occasionally a sovereign investor, but it's most often an institutional investor. These will offer any kind of products from retail mutual funds to private equity investments to securitized lending, leases, project finance, you name it, almost any kind of financing, especially if it's securitized, can be done through an Islamic financial institution. And the marketing strategy is usually as an ethical or community-based investment type of activity. Some of the major players in that area are UIB Capital, which is the Chicago subsidiary of Unicorn Investment Bank out of Bahrain. Saturna Capital has one of the highest performing mutual funds, both Islamic or non-Islamic, one of the highest performing mutual funds in the United States last year. University Financial is an Islamic bank, Islamic financial institution. And American Finance House, La Riba, is actually the first retail Islamic finance house in the U.S., and it's located in Los Angeles. And they have, in fact, just bought a conventional bank, and they are converting a conventional bank to an Islamic bank out in California. Okay. Now, as far as the industry goes, the Islamic finance industry is starting to have some centrally central regulatory boards. The most important one of these is AOFI, the Accounting and Auditing Board for Islamic Financial Institutions. AOFI provides not only the regulations, like if you know anything about the IRS tax code, there's how many volumes and volumes and volumes of the tax regulations. Well, AOFI is trying to catch up with that. They have volumes and volumes and volumes of accounting regulations for Islamic financial institutions. And they also provide some oversight and the auditing function for Islamic financial institutions right now. The Islamic Development Bank, which I mentioned before was started in Saudi Arabia, has now opened up a regulatory agency, and also the IIFM, which regulates the secondary attempts to start secondary financial markets. The Islamic Financial Services Board was started in Malaysia in 2002. And the main function of the IFSB is first of all a research clearinghouse for Islamic finance, but also was started to oversee Takaful, which is insurance, and Sukuks, which I mentioned before are like securitized bonds. The IFSB is mainly responsible for overseeing those kinds of newer products. And like I said before, a centralized Sharia standards board is in process. Okay. All right. So there are Islamic funds indices. There are actually about 100 Islamic mutual funds out there in the world. Dow Jones, Standard & Poor's, and Moody's all now have Islamic fund indices. Okay, and basically any company can potentially be Sharia compliant, or an Islamic finance investor can potentially invest in any kind of company, as long as it passes these general kinds of screens. This screen was taken from the Standard & Poor's requirements, but basically they're all very similar. And you can see that companies usually are required to have lower leverage, probably higher liquidity than normal, and there is often applied a dividend purification ratio. So that, for example, if an investor wants to invest in a hotel, it's not against Islamic principles to invest in a hotel. However, some of that hotel's revenue might come from things like alcohol. So in order to calculate the dividend, the company would just back out from the dividend payment the percentage of the profits that was gained through the selling of, say, alcohol. So they would, in that way, purify the dividends before they paid it to the Islamic investor. And this is actually not new to the finance industry. There are cases throughout the years, especially in the 20th century, of backing out income or profits from quote-unquote immoral activities such as gambling or even selling of alcohol during Prohibition, of backing those profits out before paying the dividends to certain investors. Okay, so what is the market supposed to look like over the next, say, decade? Well, there's a lot of activity going on, particularly in the Gulf and in Europe and the United States. Currently in the world, there are Sharia-compliant assets of about $800 billion. And this is up from about $200 billion in the year 1999, 2000, when I started doing my serious research into this. So it's grown 4 times in the past 8 years. Sharia-compliant assets are expected to triple by the year 2015 to nearly $3 trillion worldwide. And Sharia-compliant assets have grown more than 10% per year over the past decade. By the end of July of last year, the total value of Sukuks only, that's not including all Islamic finance, that's only the Sukuks, which are the securitized bonds, outstanding globally were more than $80 billion. The first Sukuk was issued in December of 2002. So this is basically in, 4.5 years? The whole market has grown to over $80 billion in 4.5 years. It's a very, very popular way to invest money Islamically. And private wealth in the Gulf now is more than is estimated to be more than $1.5 trillion right now. And, as most of you know, oil prices went over $100 a barrel this week. So that just means that probably there's going to be a lot more cash available in the Gulf for investment. Now, that's important because business people in the Gulf are starting to get back to investing more in Europe and in the United States. And they are now demanding Islamic financial transactions, whereas before the business people would be content to invest in whatever was a good investment. Now they are specifically requesting Islamic financial transactions. And institutions in the U.S. and in Europe in particular have been very open to accommodating this request. Now, the main populations, as I said before, I showed you a map of where the populations were concentrated. But in the U.S. alone, the biggest concentrations are in Chicago, in Michigan around the Detroit area, Northern Virginia around Washington, Minneapolis, Southern California, and New York City. The United Kingdom is very, very active in Islamic finance. And in fact, London is probably the leader in Islamic finance outside of Dubai and Bahrain. Definitely, London is very, very active in the Islamic financial world. And like I said before, the government agreed to offer a sukuk. And there is now an Islamic Bank of Britain. And I've written up here that they opened a branch in Wales this summer. And that was significant because that means that there's enough of a market in Wales for Islamic finance for the bank to consider opening a branch there. So you can see that it's spread not only inside the cosmopolitan city of London, but out into the outlying areas in Great Britain. Like I said, Indonesia, Malaysia have pretty integrated systems. Iran, Pakistan, and the Sudan have 100% Islamic finance, Islamic banks. In practice, maybe not so much, but legally, all Islamic financial institutions, all financial institutions in those countries are Islamic. Okay. Now, as I told you, my area is the GCC. And here is just what's happening in the GCC right now. 22 Islamic banks exist. They have more than $300 billion of Sharia-compliant assets alone. And they're growing every day. Double-digit growth is expected over the next decade. And the GCC's GDP growth is expected to be at about 7.5% each year for the next decade. And that's a pretty rapid growth for a GDP, especially in this economic environment. And like I mentioned, oil prices went over $100 per barrel this week, which means that a lot of cash is going to be flowing into the Gulf and it's going to be looking for an investment home. Okay. Now, the Islamic finance community is really interesting. There's not a lot of education. As Jim mentioned in my introduction, I'm teaching an Islamic finance class at DePaul, and it's one of only 2 classes in the United States right now. Europe offers actually a couple of master's degrees in Islamic finance, but there's not too much opportunity for people who are interested in getting into the industry to be educated in the industry yet. This is a growing field, but there's not too much formal education. So people learn about Islamic finance informally. And this informal learning usually takes place through conferences. And nearly every week there's an Islamic finance conference somewhere in the world. So if you really are motivated to get to an Islamic finance conference, you can pretty much find one anywhere. Here are some examples, just very, very few examples of some of the larger conferences. Most of them happen in Dubai, in Bahrain, in London, Geneva. There are some in Malaysia and in Indonesia. Singapore has a Takaful conference. There are some in Istanbul. And moving on to North America. North America just in the past couple of years has started having Islamic finance conferences. There's a big one in New York last fall, Islamic Finance in North America. There's going to be another one in New York in the spring and one in Los Angeles in the spring also. Harvard has an Islamic finance conference periodically. It's not a regular conference anymore, but it happens periodically. And right in DePaul, in Chicago at DePaul, we're going to have an Islamic finance seminar on March 13th. So that will be the first Islamic finance conference in the Midwest. So if anyone wants to learn about Islamic finance, there are conferences all over the world. And this gives a chance for people to network with other Islamic finance practitioners as well as to learn more about the industry. So, where is Islamic finance going for the next 10 years or so? Well, first of all, as I said, Islamic finance is really a response to globalization. It's a response to the ability of people to travel around the world, to share ideas, and to share As technology has improved, it's easier to move around the world, it's easier to stay in touch, and it's easier also to move money around the world and get information about different ways of doing finance that are possibly alternatives to the conventional international finance. Muslims can combine their experience with conventional finance with their belief systems, and it gives them a chance to apply their religious beliefs in an everyday setting, in an everyday business setting. And like I said, it's not only Muslims who can participate in Islamic finance, anyone can participate in Islamic finance. In addition, for Muslims who participate in Islamic finance, many of them see it as a way to strengthen community ties, not only in the local or regional community, but worldwide. Many people feel like they are connected to Muslims around the world by participating in Islamic finance. And actually, the people I interviewed in Dubai felt very, very strongly that participating in Islamic finance somehow made them more connected to other Muslims around the world because of this interest in Islamic finance. And as I said, there's outstanding potential for innovation in Islamic finance. Right now, there are only very basic ways of debt and equity financing. And only in the past 6 years or so, we've seen lots and lots of innovation with the sukuks, the securitized bonds, with takaful insurance schemes. And some people are trying to develop Islamic hedge funds right now. And there's a lot of debate in the industry about whether that is acceptable or appropriate or even possible for that to happen. So there's a lot of innovation, a lot of excitement in the industry. So finally, Islamic finance is a way for Muslims and non-Muslims to participate in the socially responsible investing movement. It's a way to earn a profit and also feel good and feel that your investment is contributing to something better in the world. Okay, well, that's what I have to say about Islamic finance as an ethical investment. And I thank you all for coming and listening to the talk. And I welcome any questions that you might have.
Karen, let me begin by asking if you could help clear up the profit model.
Yeah, okay.
When we think of usury in the United States usury laws, we customarily think of outrageous or unreasonable interest rates, but everybody who subscribes to the basic tenets of capitalism says, well, you have a right to earn a profit. And it is the buyer and seller's agreement that determines what's reasonable. If I can't charge interest in an Islamic bank, what's the model on which I earn a return?
Okay, that's a good question. I usually get that one. Okay, first of all, a lot of people automatically equate interest with profit. And so the first thing Islamic finance does is to decouple the concept of interest from the concept of profit. And under original Islamic thought, a loan was made for the specific purpose of helping a poor person to buy necessities of life. Okay, like you would give a loan to a poor person to help him or her buy some food. And so the original reason, according to Islamic law, for the prohibition on interest or usury is because if you give that kind of loan to a person who needs it, you should not expect to make a profit on that loan. Okay, that was the original meaning that was tied together with a loan and with interest on the loan. Islamic commercial law deals more with ownership and profit and loss sharing. So Islamic commercial law decoupled that idea of giving a loan at interest, which would be for a necessity, from the kind of commercial financial activities. Okay, so in that sense, interest is associated with a loan, but any commercial activity is not technically a loan. So what you have in Islamic finance, you have both equity financing and debt financing. The equity financing is pretty straightforward. I mean, you make an investment under various equity schemes. You can either be part owner, you can be a silent partner, the usual equity schemes that we think of in conventional finance. And that's pretty straightforward profit and loss sharing. Debt financing is a little bit more problematic. So debt financing under Islamic law is usually related to a couple of things. Either the financial institution will have some kind of ownership interest in the asset that the debt is being provided for. For example, when an Islamic financial institution gives a home mortgage, okay, we would think of that as being a loan. You know, the bank would give a loan to the person, to the home buyer, and the home buyer would repay that loan to the bank with a profit that would be an interest rate, based on an interest, right? What an Islamic financial institution would do, they do one of two things. In the first place, either the the financial institution would purchase the home and then take ownership of the home and then lease it to the home buyer. The home buyer would pay the lease on that home and then at the end have the option to buy it. Okay. Now, in the United States, that becomes a little bit problematic with the regulations against banks owning too much property. So the IRS is working actually with that to kind of figure out what to do with that. But the other way though that a financial institution can provide a homeowner with help in buying a house is that the bank would be a partial owner and the buyer would be a partial owner. So again, it becomes an equity finance situation instead of a debt finance situation. And finally, the third way, that the new innovation is the sukuk, which is most like a municipal bond. Now, we think of a municipal bond as a loan, basically, to your government or your municipality or whatever. A sukuk can still be issued by a government, but it is further securitized by the income stream from an asset. So, say if the city of South Bend wanted to build a road and issued bonds. If the city of South Bend wanted to issue a sukuk, they would just securitize that sukuk with the income from, say, one of the city's buildings that was earning rent. So there are financial schemes that are not loans in the sense of providing a loan for a necessity, but they're usually some kind of profit and loss sharing. And I also want to point out, Jim, that you mentioned that a person expects to be compensated for the use of the money, and that's absolutely not a problem under Islamic law. And many people say, well, the amount of the profit earned or the fee earned or something ends up being around the market interest rate. And actually that is true because the idea that if it's the market interest rate, it's what the market will bear. And that's the fair way to do business, basically. So there are several ways of earning a profit that are decoupled from the idea of giving a loan. We have one here.
Just building on your question, Jim. I have can you just explain the Citibank deal? Because my understanding is Saudi Arabia invested. They get 11.5% interest for the next couple of years, right, which goes at riba. Mm-hmm. And then that's convertible at a really good strike price, which will then go at the prohibition of haram, right? Because then they'll be owners of a bank. Well, so how do you explain that sort of deal?
Oh, well, that's not an Islamic financial transaction, actually.
So that just means that you can be in Dubai or in Saudi Arabia or in a number of other places and be religious and not have to do Islamic finance? Sure.
Yeah. Like I said before, most financial activity in the Gulf in particular, in the Middle East, is not Islamic finance. Islamic finance is more concerned with the way in which you earn the profit, or the way in which you make the investment, or the way in which ownership passes from the seller through the financial institution through the buyer. And the Citigroup deal was actually Abu Dhabi that invested in, and that's not an Islamic financial transaction. So, there's a lot of talk, and especially since that was a sovereign fund. Sovereign funds are very, very big in the news these days. And you bring up a good point, because Sovereign investment. Okay, what I've been talking about today are mostly institutional, private institutions or publicly owned institutions. But the sovereign investors provide an interesting case in this scenario. And this is the one place in which politics really does get involved in the finance part a lot more. And sovereign funds are often hesitant to use Islamic finance because they're often hesitant to be seen as being tied too closely to Islamists. Now, in my experience, people who work in Islamic finance are very, very moderate in terms of their religious beliefs and don't tend at all to the extreme. But the sovereign funds are hesitant to get involved in Islamic finance for that very reason. So the Citigroup deal was not purported to be an Islamic financial transaction. It was just a conventional transaction. Okay.
I'm interested particularly with the interaction between the government because my understanding, the government is not based on Islamic finance necessarily. And for instance, one way that monetary policy is instituted in Western cultures is with interest rates. So particularly there, as well as with the securitization issue, and there are debt relationships that are with Islamic finance, and how risk is treated with debt. I know you mentioned risk, and its different treatment, and a lot of the higher interest rates generally indicate higher risk in Western standards. So I'm interested how they come up with their risk standards, and also how the government interacts in terms of monetary policy based on the fact that there's essentially no interest earned.
Right. Right. Okay. There's two questions, I guess. One about the government policy and one about the treatment of risk. Okay, the first about the government policy is, like I just said, the governments in the Gulf, which is what I'm most familiar with, are actually quite hesitant to be involved in Islamic finance. And as such, the central banks don't have a very well-developed policy for the Islamic financial institutions in general. Dubai has a Dubai Islamic Financial Center, which is sort of a clearinghouse. It's a new thing that's sort of a clearinghouse for financial institutions, and they are trying to provide some regulations. But the governments actually regulate the financial institutions right now as financial institutions. And the separate AOFI, the Accounting and Auditing Board I told you about, really regulates the financial institutions themselves from a Sharia standpoint. So the governments right now treat the financial institutions more or less like a conventional financial institution, and just the changes in interest rates don't really bother them. The AOFI, audits those. Okay. So, and Malaysia is a little bit different because the central bank did try to incorporate the policies into the central bank. So the central bank in Malaysia does have a bit more say in the Islamic financial institutions, and they worked it all out because they started from the ground up. Whereas in the Gulf, they're trying to piece things together with the new industry. Okay. All right. So your second question was about risk, and like I said before, that's really interesting. The risk, people say that Islamic finance is generally less risky, which means it is often thought to earn lower returns. And the reason it's thought of as less risky, now that's always debatable, right? But the reason it's thought of as less risky is because for now, all of the financing has to be securitized. You can't give an unsecured loan. So the best way to treat risk in that situation is just to have an asset, a securitized financing arrangement or an equity position. People are trying to move away from that because, you realize that you don't get the highest returns if you always take the lowest risk. And so that's something that's actually a debate that's really big in the industry right now in terms of the hedge funds. Is it possible to take a bigger risk and earn a bigger return Islamically? And that's actually quite a debate right now, whether the risk can be increased if the returns can be increased. Okay. All right. Let's see. We have one here.
What about transparency of these Islamic financial institutions? Are there principles or benchmarks and how they are used?
Yes. Yeah. He asked about the transparency. And actually, when I was doing my field work, that transparency was the big word in Islamic finance. Yes, and I would say Islamic financial institutions are almost as transparent as conventional institutions. In the sense that, the information is publicly available. And AOFI, the Auditing and Accounting Standards Board, has been very helpful in providing those standards and making sure the financial institutions adhere to them.
Karen, I have two questions. The first one, therefore, in Islamic finance, is it true, therefore, it does not give consumer credit card? Just because I don't know how you tie it to assets. The second question I have is that there's a general nervousness that particularly the oil funds, the sovereign funds coming out of the Gulf Coast, will by and large go into only Sharia compliant sort of investments, and therefore the money that used to go and buy General Motors stock or Google stock or nowadays would not be available, would dry up. From your talk, there's a general direction, because now there's the options of putting your money, assets into Sharia compliant options. But is there a question of magnitude, whether that the majority of those sovereign funds, particularly from oil, will get 90%, 75% captured by only Sharia compliant options?
Yes. And thank you for coming to my talk today. Okay, let's see. I think I'll answer the second part first about the sovereign fund, or about the general funds. That's interesting. There is definitely a greater demand coming out of the Gulf for putting those huge amounts of cash into Sharia-compliant assets. But I guess the first thing we all need to remember is that bottom line, these are business people, and they will more often than not go for the highest return. Now, having said that, there is so much innovation in the Islamic finance industry that almost any kind of investment, are not into any kind of industry, but almost any kind of investment can be Sharia compliant. And what I mean by that is not that they twist everything around to make it Sharia compliant, but that really the companies you mentioned, General Motors, Google, are actually already Sharia compliant. And so in that sense, a lot of the money can just go straight into the usual investments. But the other thing that's been happening that's really interesting in North America, and this has only been in the past couple of years, I attended the Islamic Finance in North America conference in New York last October. And the interesting thing about that conference is that it was sponsored by two non-Muslim law firms. And the reason they decided to sponsor that conference and to learn more about the whole industry is because they have so many clients who are requesting Sharia-compliant investments in the U.S. So they wanted to find out what exactly is Sharia compliant. So it turns out these companies, like you mentioned, are already Sharia compliant. Real estate is very, very amenable to Islamic finance. And so a lot of this money is going into real estate. And in general, I don't think, and most people in the industry see this as an opportunity, see the cash and the ability to put that cash into Sharia compliant assets as investments as an opportunity, rather than, I think the business people from the Gulf would prefer to find investments that are Sharia compliant rather than keep their money away from the good investments. Okay, so that's hopefully answers your first question about, or the second part of your question. Now, the first part of your question was about credit cards, and credit cards is actually a real hot issue, a hot button issue in the industry today. Several banks in Malaysia claim to have issued credit cards. Usually they work more like debit cards in the sense that you just deposit some amount of your money into the bank and then you just use it as a debit card. Well, of course, that doesn't really solve the problem of credit, right? So it's really a tough dilemma for the retail banking side of Islamic finance. Another way of potentially doing a credit card is to securitize each purchase, but then some companies have tried that, and that's really a nightmare. If you want to go and buy a pair of shoes, are you really going to pledge that shoes to the credit card company? So it's been a difficult dilemma for the companies, and to my knowledge, nobody's really solve the dilemma other than having a debit card, a debit type of card, which just solves the problem of not having cash on hand, but doesn't solve the problem of credit. But the other thing is that in terms of business practices and kind of keeping a handle on the greed, is a lot of people say that there should never be an Islamic credit card because we shouldn't be encouraging people to live beyond their means. So you know, that's a debate in the industry and something that's not been worked out yet. Oh. Okay.
I was wondering if you could talk a little bit about your experience in the Middle East as a woman in an environment where both culture and religion sort of dictate domination by men.
Okay, well, first of all, I don't agree that the culture and tradition dictate domination by men. My experience in the Gulf was the following. I moved there after I had graduated from college, had some work experience. And since my husband had grown up in the Middle East, he's not from there, but his sister was actually married to someone from the UAE. So I had a lot of experience within that culture. And, you know, it's often a misconception that when genders are separated, that it implies domination of one over the other. And I actually did not find that to be the case. You know, both in the home life, whereas, you know, the women have domain over the home, the men have domain over the public space. And that's also changing now, by the way. A lot of women are in the workforce, and, you know, a lot people are comfortable with that. But my experience working was actually really, really interesting. Now, I was pretty young when I went there. You know, I was this young American professional woman in the early 90s, which was still, you know, in terms of gender relations, that was what, like 17 years ago, I guess. So, you know, it was a while ago. So I was this young American woman, and I had no problems whatsoever. And in fact, it was actually a better experience for me to work there than it had been for me to work for this bank in Chicago. And here's why. Okay, first of all, my MBA from a good American university trumped anything else about me, okay? And my work experience trumped anything else about me. At the time, there weren't a lot of really highly educated people in the workforce in Dubai. So the fact that I had an MBA from a good university and I had work experience from a bank in Chicago was really the thing that got me my job, and it's what carried me through. And I found that I got a lot of respect because of that. And also, in my particular work environment in the finance private equity company, I got a lot more responsibility than I would have had being a credit analyst in the bank and going through the credit analyst program. I got a lot of responsibility, and a lot of that was because I had my MBA from a good American university. The second thing that was really interesting is that I was such an anomaly there that I got access to all these people just because they wondered who I was. So finally, when I got access to them, you know, I would have these business meetings with the board members of the company. And so they were wondering who I was, but then they found out that I was sort of, I mean, I guess I'm sort of smart, you know. So I had this MBA, and they figured out I actually knew what I was doing. So it was actually a really good experience for me. I got a lot of responsibility, a lot more than I would have had at the bank in Chicago for a long time. And also the fact that I had an MBA, that I was educated, and that I knew what I was doing really were good things for me in the workforce there. And now, of course, when I went back this time, it's very comfortable working there. I mean, and the thing about, when you think about the sort of idea of gender segregation, that doesn't really apply in the general business environment. The Islamic banks have made a separate branch, but that doesn't mean that women can't work. And in fact, well, let me tell you this. So in the women's branch, there was one woman I met who was very interesting. She was from a very, very traditional family from Dubai. And she actually, the reason she was able to be out in the workforce is because she was working for an Islamic bank. Her family said, she went to college, she got a business degree, and her family said, there's no way you're working. And she said, but I want to work for this Islamic bank. And so they said, oh, it's an Islamic bank. You can go out and you can work for an Islamic bank. So this woman was actually in the workforce because there was an Islamic bank available for her to work at. So, my experience was nothing but great, and it was a lot because I was very highly educated. But even the local women who are living in Dubai now, they're out in the workforce right there alongside men. And if their families are a little more traditional, they don't want them to be working alongside men, they now have the opportunity to be out in the workforce in the Women's Islamic Bank. Another question? Okay, right over here.
Do you think current politics encourage the U.S. efforts in expanding in these different regions with Islamic finance?
Yes, I do. What I saw, I did my field work in 2002, 2003. And, so what I was seeing was U.S. policy right in the aftermath of 9/11. And, in fact, I was living in Dubai when the U.S. invaded Iraq. There is almost unconditional support for the U.S. in the Gulf, for the U.S. policies in Iraq in general from the Gulf region. However, some things I noticed on a personal level were, number one, a lot of the families stopped sending their children, especially their sons, to the U.S. to get an education. Not because the children weren't getting admitted to universities, not because they weren't getting visas, but because they just heard so many stories about how difficult it is to be Muslim, especially a Muslim man in the U.S. So in that sense, they would send their kids to the UK, to Australia, to New Zealand, to Canada, to the other English-speaking countries. And I think that actually hurt the education system a lot here in the United States because these bright, talented people were going to other parts of the world to be educated. And I think that's a loss for all educational institutions in the U.S. But in terms of Islamic finance, there was a similar kind of effect. And the effect was not so much, was not really at all being against American policies. It was more that it's just too much trouble. You just have to go through so many hoops to get your money here or invest your money here that it's just easier to put it in Europe or the Far East. Especially the Far East really benefited a lot from the U.S. policies, or even Australia, New Zealand, and Canada also. So I found there was that response to the U.S. policy, not in terms of an opposition to the policy, but more on a personal level of it's just so much trouble to invest here. Now, a lot of that's falling away. Most of it's falling away, both because the U.S. has eased up on its restrictions and also because investors from the Gulf realize a couple of things. Number one, that really there are good investment opportunities here in the U.S. And, if they want to invest their money and get a good return on the investment, the U.S. is still a good place, strong place to do it. And also, now that things have settled down, a little time has passed since 9/11, relations are getting more normalized. People are starting to travel more, send their children over here for education more often, and also to think about sending their money back over here for the investments.
We may have time for one more.
Oh, Dean.
Karen, this is more of a qualitative close-up question, and that is, when you present this topic of Islamic finance, the growth of Islamic finance and so on, do you encounter hostility from your audiences? I mean, we're a business school, we could sort of handle some of these different issues and so on, but with the climate it is in the U.S., have you ever encountered that?
Yeah, that's interesting. I gave a talk at another business school, let's say, in the region, back in the fall. And normally I don't encounter hostility. I think people are really, really interested in the Islamic finance part. First of all, just what is it? What are the opportunities? And why is this such a hot topic? Because you hear about it a lot in the news. I often get pushed a lot on the question of interest and whether or not is this interest or this is not interest or the specifics of it. And my general answer to that question is the specifics of interest aren't what's important about this industry. What's important about this industry is that people are thinking about business values and ethics in a way that ethics and values in a way in which they want to apply them to their everyday lives. And business is such an important part of a person's everyday life. It's how we make a living. It's how we make our investments. It's basically how we survive is in the business world. And I think the important part of the industry of Islamic finance is not whether or not this or that is technically interest or not interest. It's really that people are thinking about injecting certain kinds of ethical values into their business practice and thinking about it and actually building an industry around those kinds of thoughts. So that's what I think is important. And in that sense, I think people in business schools are generally interested in that side of the Islamic finance industry.
Karen, thank you so much.
Oh, my goodness.
Very much.
Thank you very much for having me. I really enjoyed it. Oh, thank you very much. Thank you all for coming.